Inspirational and motivational here at Clubhouse. Get a better mindset and set your goals here at Clubhouse. Educational things you need to know here at Clubhouse. Like credit, home, buying, loans, and much more here at Clubhouse. The space for
Hey. Hello, everybody. Welcome to the Home Buyers Clubhouse, where we go live every Wednesday and every Friday. On Wednesdays, we drop something inspirational and motivational. And on Fridays, we drop something educational. For those of you guys who don't know me, my name is Jessie Lynn. I am a triangle realtor with A to Z Realty. Miss Erica Batts, loan officer. Introduce yourself, honey.
I am Erica Batts. I'm your mortgage loan officer. I'm also known as your home loan chick on Instagram and TikTok.
Hey, look, y'all. TikTok, y'all ain't used to me. Facebook, they used to me, y'all. But something going on with my eyelash today. I'm struggling. So for y'all see me take it off, it's normal, okay? All right, y'all. So today we are I can't see out one of my eyes, girl. Today we are talking about building your credibility. That's what we're talking about today. So throughout this month, we're gonna embark on an exciting journey to empower you with the knowledge and the tools to improve your credit and achieve your dream of home ownership. So Erica, I got a big question for you, and I got a big question for our audience. Why is good credit essential for home ownership? For one,
I think good credit is essential for everything, really, because when you look at how much bad credit costs you, like when you're looking at, that's going to get you a higher interest rate on a car. That's going to get you where now you got to pay a deposit on your utilities, or those type of things. So bad, having less than stellar credit. I don't want to say bad credit, so I want to say less than stellar credit, and that's why it costs you.
Absolutely. Your credit plays a pivotal role in making home ownership a reality. And like you say, it's good to have good credit with everything. And we have our home and credit challenge going on this month or whatever. And I told my story about how I went from a bankruptcy to a repo to all kinds of stuff. And now I have creditors constantly begging me to get credit. So you guys, you definitely want to be at that point. No matter where you are right now, you definitely want to do everything you can to get to that point. So definitely, let's talk about it. So a good credit score offers numerous advantages. Number one, it helps you qualify for a lower interest rate. Erica, why is that important? Erica, can you hear me?
I think my earbud went out. I can't hear you.
So I said, why is good credit essential for home ownership? And I said the first thing is qualifying for now I got an echo on your side.
Okay, hold on.
Yeah, just turn that one up.
Hold on, I'm gonna put it on mute over here.
You good? All right. Okay. I'm glad I can hear you on TikTok because you muted on the other side. Okay, awesome. So we were just saying that good credit is essential, right? And then I said, why is good credit essential? I said, for one, whenever it comes to a home loan, you will qualify for a lower interest rate. And I said, why is a lower interest rate important whenever you are shopping for a home?
Because when you have a lower interest rate, that's less money that you pay over your 30-year time span for this particular house. A difference of 1 point in credit score can be a $50,000 difference over a 30-year time span.
Absolutely. A higher credit score can help you secure lower rates on your mortgage, and this translates into saving you a lot of money on the life of the loan. So, and it also equals lower payments, correct?
Yes, that is correct.
Awesome. And also having a good credit score will also be it'll help your loan approval. And why is that the case, Erica?
Because you want to have as many loan options available as possible. So just like in, we know in the home buying world, if you have at least a 640, well, then that may allow you to qualify for down payment assistance. Whereas if you have a 600, you have a lot less options as far as loan products that you're available to utilize.
Absolutely, you guys. All right, so let's talk about some tips for improving your credit, because again, we said that good credit is important whenever you are thinking about buying a home. So let's talk about it. So all right, let's talk about it. The first thing you want to do is you want to pay your bills on time. Pay your bills on time every time. Consistent on-time payments are one of the most effective ways to boost your credit. Erica, what, like, as a lender, if I'm out and I'm shopping for a home and you saw a late payment on my credit, what would you do? I mean, what kind of bells would go off, or what kind of questions would you have, or just tell me as a client, how would you respond to my late payments?
Well, a lot of times you have to remember that your credit profile is a history of basically when you gave your word to do something, did you do that? And so just like when you think about in your own situation, if somebody tells you they're going to do something and they constantly don't do that, how likely are you to trust them to do it again? So that's kind of what credit tells you. But when you see like a late payment, a lot of times, sometimes I may need an explanation as to why this payment was late, especially if it's in the last 2 years. There are some loan types where I can get a letter of explanation about why that payment was late, and be okay. But then there's others where you've been late twice on this account in 2 years, and they're like, no, I don't want to take a chance on you.
So if I was late twice in 2 years, what would you say? Like, hey Jesse, why were you late? I mean, what's the problem? And my score is somewhat okay.
Sometimes, but you still have to look, even if you've got a 700 credit score, but you've been late on, twice within the past 2 years, creditors are still saying, okay, this may be a sign of a problem. So it could be that, oh, you just forgot this particular thing, or it could be, no, they're starting to have some issues.
Okay, so paying your bills on time is one. The second one is keep your credit utilization rate low. You want to aim to use a small portion of your available credit. A high credit utilization can impact your score. Erica, now this is my problem, y'all. Right now, even now, like I said, I've been building my credit for years. Even with the repo, bankruptcy, and all of that. My score did get back up, but now my score is dropping. Why? Because my credit cards, my utilization rate is high right now. So Erica, can you explain why that is important?
Because again, it's a sign of maybe not being able to handle credit. When you constantly have a higher balance. Like there are ways that you can still use your credit. So it may be making a payment early. So if you $2,500 this month, but you know that your cutoff date is on the 15th of each month. So that means by the 14th, you want to go ahead and pay down the $2,000 on that. So now when you get your bill, it's showing like they only owe $500.
And for the people that's out there that's currently trying to build their credit score, and you don't understand why your credit score isn't moving, and you just got a secured credit card and you have a $300 credit limit on that card, but you're currently spending $250 of that $300 credit limit. You're still paying it on time, but you don't understand why your credit score isn't moving. Your credit score isn't moving because you've gone over what the recommendation is, about 35%. But if you're buying a home, we say try to keep that even lower, about 10%. 10% of 300 is what? $30. There you go. So you definitely want to keep your utilization rate as low as possible on all your credit cards. So you pay your bills on time and keep your utilization rate on as low as possible. The third thing you want to do, Erica, is you want to make sure you dispute the errors on your credit report. So why is this important? And a lot of people feel like credit repair or credit restoration is illegal, but these creditors, they owe you the ability to accurately report these items to the credit bureaus. Why is this important for them to look at their credit report all the time on a regular and check it for any inaccuracies.
Because it could be things like addresses that you didn't live at. It could be things like bills that, like medical bills that have been
Mhm.
attributed to you that you don't owe, and then those things go into collections. So if you're gonna say this is this is a picture of my credit profile, then you want that information to be accurate.
Absolutely. So you guys, it can be something as simple as, in our credit class that we're doing right now, the home and credit masterclass. We showed them a copy of a credit report, right? And it was all three of them lying side by side, but one of the credit reports reporting a $0 credit limit. And what is that going to affect, Erica, if they're not reporting that correctly, your credit limit? It's going to affect your credit utilization rate, right? It's going to show that you're maxing out a card that's not even there. So this is why it's so important to monitor your credit. So what kind of apps can they monitor their credit on, and where should they go to pull their credit report?
You can look at and you pull your credit report on annualcreditreport.com. You can look at apps like, now Credit Karma is good to monitor your credit report. But it may not be the best in order to actually get a score that we're going to use in order to issue credit to you. But it is great to monitor credit. But you also want to pull your own credit report at annualcreditreport.com, and they will give you a free copy of your credit report. Right now, they still have the COVID era concessions where they are able to give you a free credit report on a weekly basis.
Absolutely. So another thing is, you guys want to be mindful of any new credit application. So right now we are paying our bills on time. We are checking our credit utilization rate, which means we are keeping our credit card debt low. We're keeping it low, and we're paying it off each month. We're keeping it at 10%. We are disputing our errors on our credit report by pulling what Credit Karma. We're looking at our credit report by getting the free credit report at annualcreditreport.com. If you're thinking about buying a house, what you want to do is pull it at myfico.com as well, to kind of look at your numbers and your credit amount. We were talking about in the class the other night that people have seen that Credit Karma, well, you said it was like 100 off one time for one of your clients.
Yeah, I think Nicole said hers was 100 off. Now, I've usually seen anywhere 50 to 70 points.
That's still crazy. That's crazy. Absolutely. So myfico.com is a better place for you guys to pull your credit report. The next thing is, again, we said be mindful of your credit applications. If you're thinking about getting credit, because these lenders, they're looking at, they said, oh, well, she's hungry. The issue is this, and we talk about this a lot. They want a loan to you if you don't need the money. Okay. If you don't need the money, but if you need the money, they don't want to give it to you. Okay. So this is what all of this is about. If they see that you're maxing out your credit cards and you're applying for a ton of credit from place to place, from this place to the next place, that's a sign. There's all kinds of bells going off, all kinds of red flags are going off, because she's desperate. She must be about to go in bankruptcy. She must really, really need this money, and she ain't gonna pay us back. Is that what they look? Is that how you feel, Erica?
Kind of, because when you look at it, it's like if you don't want to get somebody that doesn't owe everybody in town. So if you owe everybody in town, then it's like, well, I don't want to lend to you too, because you already owe 20 other people before you gonna get to me. So
going from person,
I don't. Right. So I don't want to loan you money. But if you come to me and hey, maybe you only owe 2 or 3 people, I'm like, oh, sure, yeah, I can give you the money for that. So think about it like that. You don't want the person that owes everybody, because that either means that you don't have good money management, or, because if you got more a month than what you got money, which most of us do, it's still about how you're able to manage that. So just like with the credit cards, then you want to look and see, all right, what reports on my credit report? So if I need to make a payment arrangement to my light bill so that I can pay Visa, then that's going to be a better option than to pay all of my light bill and not pay Visa.
Absolutely, y'all. And look, for those of you guys just tuning in, also look, y'all can get a free checklist. Y'all can get a free home buying checklist. on our site. You could join us. We're doing a home and credit masterclass for the next 6 weeks. Actually, we are on week 2. On Tuesday will be week 2. We just started week 1, but we do have the recorded sessions in your class portal as well. But if you feel like you don't want to pay $20.23 for our master class, you can get a free credit checklist and a home buying checklist on our site at hcrjournal.com. H as in Henry, crjournal.com. So that's your home buyer checklist, and you can also get free credit dispute letters as well. All right, so let's kind of
that's definitely worth the $20.23 just
right,
to
and you
be
get
able to have access. Right.
Absolutely. So yeah, all right. So a lot of people don't understand what a credit score is, Erica. We're sitting here talking about how to build your credit and how to keep your credit score up and all of that, but a lot of people don't understand what a credit score is. So what is a credit score? And you just said it earlier. Exactly is a credit score, and why is it important whenever people are buying a home?
The credit score is going to be it's basically a snapshot of, do you pay your bills on time? Is it okay to loan money to you? So we all know that you can have fair credit, you can have good credit, you can have excellent credit, all of that. And so that's basically all it is saying, do you pay your bills? And when you look, because you're looking at, it looks at your payment history, what your credit utilization is, all of those things, the amount of new accounts that you have open. All of those are things to look at when you look at credit.
Yes, absolutely. So your credit is calculated, all right, based on all the things that we just mentioned. Your payment history counts 35% of your credit. Are your payments being paid on time? Your amount of debt is about 30%. So payment history, that's why it's number 1. Your amount of debt is 30%. And that's why I say it's important to make sure you're not maxing out your credit cards. Your length of credit history is 15%, Erica. And so many people don't understand when they go and start closing these accounts, they don't understand why their score dropped like 100 points. Why? Because your length of credit history is about 15%. The longer the credit history, the better, correct? I've seen people say, hey, look, I just paid off my car. My score dropped 100 points. I paid this off. I'm trying to build my credit and my score dropped 100 points. Don't start paying off things. Don't start closing these accounts. You can pay them down, but don't close your accounts. Why?
Well, and that's what I tell people all the time is, if you're looking to get a house, then we need to have a conversation before you start I'm just going to pay off everything. We need to have a conversation so that I can help guide you and tell you the best way in order to be able to do this, in order to fix your credit.
Exactly. And 10% is the type of credits. So a diverse credit, a diverse credit report can affect that by 10%. And what does that mean when we say diverse or the different types of credit?
That means the mix of credit that you have. You want to have installment debts, which are things like a car payment, something that you have a set number of payments in order to pay this off. And then you also want to have revolving credit. So that's when you have credit where once you pay off your amount, now you have your $300 to spend again. So as long as you pay them $300 each month, next month you got $300 to spend again.
So we hear this a lot when they say good credit, good credit, good credit. What's a good credit? And also let's talk about the minimum score needed whenever you buy a house.
So your minimum scores are going to be 580 for most government products. And that's going to be your FHA, your VA, your USDA. And then for your conventional financing, 620 is your minimum score. Now, a lot of times you need at least 640 for down payment assistance programs.
Good job, Robbie. Robbie said credit. I finally got to 710. It took a while. Absolutely. It does take hard work. A lot of people think that building their credit and repairing their credit is going to be overnight. But it's not an overnight process. But we do tell you, don't give up, because I had a client one time, she came to me and she wanted to buy a house. Of course, she wasn't approved. But what she did was she went to her credit union, she used their programs, and she done different things, and she built her credit, and she got her a house within 6 months. So again, it's not going to happen overnight. And if anyone is telling you that they can help you guys Yeah, they said, but I got my home with a 623. Absolutely.
Mm-hmm.
Yes, you can get a home with a score as low as a 580. So yes, 623 is doable. But as we mentioned earlier, the higher the higher your score, the lower your rates. You have the opportunity to get better rates, and you also have the opportunity to be approved for different programs. Some people may need down payment assistance. They require a higher credit score. Erica, do you know the amount for down payment assistance, the credit score for that?
640.
640. So they
Mm-hmm.
require a higher credit score. And again, you can get a house at 580. But if you want to qualify for all the programs that are out there, it's definitely a good idea to make sure that you are doing everything that you can to build your score. Some people don't have the money to buy a home. So you definitely want to start saving. Now is the time to start saving. And while you're trying to save, continue to make sure you're paying your bills on time and budget. A lot of people always forget that part. You know, you got those cable bills, you want to go to Starbucks every day, you want to go out to eat every day. And it's definitely a good idea to make sure you're budgeting and trying to understand your credit. If you don't understand credit, you could easily ruin your credit. You could easily find yourself doing the same thing and just spinning in circles, spinning that wheel. And this is why we not only teach you about home ownership as your realtor and a lender, we also teach you guys about credit because it's important as well, and budgeting and saving. Right, Erica?
Yes.
Yeah, I said a lot. Anyway,
But
so yeah,
everything you said was correct. So that's why we teach people. And I feel like we definitely provide a valuable service because nobody teaches you how to spend money. Like, you know, when you get your first check, nobody says, hey, this is how you're supposed to break this down. And I feel like for a lot of us, you kind of start with good credit, then we mess it up because we didn't pay this person or you missed this or all of those things. And it's not something that you can't come back from.
Absolutely. But good job, you guys, for getting the 710 credit score and for buying your home with the 623. So good job. Again, this is why it's important to shop around. And if your lenders, speak with the lender. You have some people that comes in and says, I want this loan type. I want this loan type. See what you are pre-approved for. Right? You can't just choose and just pull it out of the sky. You could if you have good credit, but if you don't, have the lender do a comparison for you. Ask them, hey, what loan types do I pre-qualify for? Which ones? Which ones do I pre-qualify for? And then go from there based on the origination fees and all those other fees that's included. So yeah.
Generally, we can give you a couple of options. So just because you like right now, the fees are cheaper on FHA. So a lot of times we can say, all right, even though you qualify for conventional loan, an FHA would be a better option because of XYZ. So we can compare and see what works better for you because everything is not going to work for everybody.
Robbie said, I wave to Starbucks while passing by. I'm telling you guys, sometimes you have to, if you really sit down and take a look at your debt and you can't figure out like why I'm not saving. Look, honey, I talk about this a lot. For me, if I don't see it, it don't exist. But if I really want something, like when it was time for me to buy my house, I knew what I needed to do. I knew I had to build my credit and I knew I had to save. I was getting, like, when it came to tax season and all of that, I get my tax refund check. I didn't have that direct deposited in my account. Just give me a check. I saved that check. Like anything I could do to save money. I bought my coffee. I made my coffee at home. Like, you want those Starbucks lattes and you want to eat out all the time. Sometimes you just got to do what you got to do for about 6 months. And then by the time, like, I saved up so much money. Like, I had enough money to pay off my car after I got my house. But, you know, I was still building my credit. You know, I wanted to get a fence and do different things like that. So I was applying for different credit cards after I got my house. You see what I mean? So yes, you're going to need furniture in your new home. You may need different things, but you do that stuff after and prioritize. You don't want to start. I've seen people work hard. They come to me and say, Jesse, look, I want to get a house. I teach them how to repair their credit. I walk them through it. They build their credit up. They get denied one time, and then they go get a car. Like, find out why you were denied. If Erica say, I can't pre-approve you for a house, you need to say, Erica, so what do I need to work on? Talk to your lender and say, what do I need to work on? And work on it. Don't get discouraged, you guys. They may say no the first time, but work on it.
And I will say, sometimes with a good lender will know other programs as well, not just the programs at their institution. So just like there are sometimes where I have to send a person to State Employees Credit Union. I'm like, listen, you've worked hard. I can't approve you, but here's somebody that I want you to call that works at a different institution that may be able to get you. Because for me, it's about getting you in that house. I would love to be the person to help you, but sometimes I'm not going to be the best option. And if your best option is somewhere else, because I do know a lot of the programs at other institutions as well. So I may have to send you to State Employees or, a different place, because I know what their programs are and I know what their approvals are. And I'm like, okay, this is going to be a better option for you than to do this.
Absolutely, Erica. I had a lender, they wanted a USDA loan, and I was speaking with the lender at the time, and he said the same thing. He said, state employees right now, they have a better program than I can offer you. So you're right. Shop around, you guys. Shop around. It's not going to affect your credit score. Shop around. And
wait. Let me clarify. Shop around for a mortgage. That's not going to affect your credit score.
Well, now explain why you had to clarify that. Explain it.
Because shopping around, that might mean I'm going to Target, I'm going to Marshalls, I'm going to Ross, and I'm going to apply for a credit card at all of those places. But all of those will affect your credit. But because they know that a mortgage is going to be a large purchase for you, they expect you to shop around on that. So you do have to, you are able to check with various lenders to see what's going to be the best option for you. Because not everybody is available to join State Employees Credit Union. So that might not be something they can do. But there may be another alternative at a different bank, or there may be a different program that I have that I'm like, okay, so you can't do this program, but you can do this one. So I feel like the answer is never no. It might be not right now, but the answer is never no.
Look, you guys, go home tonight. If your next goal is to buy a home, you definitely want to go home tonight. First of all, go get our checklist. Get your checklist on budgeting. Your journal is free. hcrjournal.com. You can get your checklist on how to budget. The checklist includes how to do your credit repair, how to dispute your credit, and it also includes a home buyer checklist, and it's free. We have a book, but again, you could, if for free, you can just start with the checklist if you want to. But if you want to join our class, we have a home and credit masterclass as well that we just started last week. It's a 6-week program, so everything's recorded if you want to catch up. But it's only $20.23 also, and you can get that at mycreditrecipe.com. All right. So, but let's continue, Erica. So everything that we said, everything that you guys can do to improve your credit. Number one is you want to start. Stop. So everything you want to do is you want to make sure you pay your bills on time. You want to manage your credit utilization rate. Dispute those errors. The longer your credit history, the better. Do not go and reopen no collections that's been on there for more than 2 years. Thank you, Robbie. I appreciate it. Thank you for tuning in. And also, you want to make sure that you apply for new credit wisely. And that means don't go out and, like, when you go get a car, for one, and we're talking about buying a house, but when you go to these dealerships, what they do, they pull your credit like 100 times and your score drops like 100 times.
Yes, because now with a car, that's why you want to get pre-approved with your credit union or your bank before you go shopping. Because if they're trying to run your credit at the dealership, they're running it through 20 different places. And so that's going to be horrible for your credit score.
Absolutely, you guys. But if you don't take anything else, like from today, whether you are just getting into a new home or you're just looking for like your 10th investment property, your score is important. And a lot of people don't understand that. A lot of times they call us and they say, I'm good. My credit's good. I'm good. I'm good. The money's there. Still, we don't know that. So that's why it's important for you to go ahead and get that pre-approval before you start shopping around for a home, because the real estate agent needs to know that you've been pre-approved and the seller needs to know you've been pre-approved, because they're not going to take your offer seriously. Right, Erica?
That is true, because you want to know somebody has the money. Before I take my house off the market, I need to know that somebody has told you that they're going to give you the other $300,000 that you need in order to purchase this house.
Absolutely. So understand that credit plays a large part in helping you qualify for the amount of money that you want and need. And by keeping up with your credit score and understanding how it will tie into your investments, you can be sure to benefit from the points that you have today. Okay. So before you get involved in a loan, you will want to check your credit score in order to make sure that you will have the ability to get the loan you want. There are 3 major companies that rate your credit score. Who are they, Erica?
Experian, Equifax, and TransUnion.
And if I want to buy a home, do you just pull one from one bureau? How does that work?
No, we actually look at all 3, and then we use whatever your middle credit score is going to be.
What's the middle credit score? What does that mean?
That's the credit score in the middle. So we look at all 3 of them. So if that's going to be, if you have a 600, a 620, and a 625, we're going to pick the 620 because it's in the middle. So we don't average them out and then say, oh, okay, well, as long as I got a 700 on this one, I can have a 600 over here. And no, we average whichever score, whatever your score is that is going to be in the middle, that's the one that we're going to use.
So you're not choosing the highest, you're not choosing the lowest, you're choosing what's right there in the middle. That's and understand that your credit will affect the loan you get, because it helps you get it helps you to be pre-approved for a loan. Lender companies will more than willingly be willing to work with you if you have a higher score. So also understand that. Right. For some of those that want to be pre-approved for loans, some things that may be considered is your financial stability, Erica, and your employment. Let's talk about that. Why is that important? And do I got to have money in my account before I buy a house?
Well, because of course you want to know that employment is going to be stable. You want to know that they're going to have employment for, the next 3 years. So when you're looking at employment, so you don't want, okay, you can't just be, I've only had a job for 6 months. Unless you were in a trade school or something like that, then, we may be able to count that time as well. But in most cases, you need to be employed for 2 months. It may not necessarily be in the same job, but you need to be employed for 2 months. I'm sorry, 2 years.
For 2 months. Okay. So
no,
did you mention self-employment?
I did not.
Okay.
So even with self-employment, you need 2 years worth of tax returns for most programs. And you need to have been in business for at least 2 years. There are some programs you can do with 1 year of tax returns. You can do like specialty loans, like a bank statement loan, things like that. But they still want you to have been in business for 2 years, even if you only have 1 year of tax returns.
And did you mention if I needed to have any money saved up before I bought a house that's in my account? Do I got to have like proof of money that I have right now?
You do, because you're going to, even if you buy a house, let's say that you buy a house with a USDA loan, you're still going to need closing costs. Even if you get the seller to pay your closing costs, you still need your due diligence money. You need your earnest money. You need your appraisal fees, all of those things.
Okay. All right, y'all. So in closing, you guys, if you're working on building your credit score, some things that you need to keep in mind. For one, you definitely need to make sure that you pay your bills on time. Your payment history is 35%. Your amount of debt, that's 30% of your credit score. The length of your credit history is 15%. The types of credit is 10%. And your credit inquiries are 10% as well. Erica, did we miss anything? I think we went over everything.
So, I think we got it all, but it's a lot of good information out there. And we're here to help. As far as if you have questions about credit, contact either of us. We will tell you what we know.
Absolutely. And look, don't forget to get our checklist, you guys. She's a lender. I'm a realtor. So get our checklist. We have your home buying checklist. It's free. You also have your credit checklist. You have a free dispute letter in there, which is free as well. And you also have a sheet to do your budgeting on. Budgeting is very important, especially while you're trying to buy a house, because you want to save, because you're going to have all kinds of inspections and appraisal fees and all kinds of fees that you're going to need to save up for this property. So all of that is for free on our website at hcrjournal.com. H as in Henry, crjournal.com, homecreditrecipejournal.com, hcrjournal.com. All right. For those of you guys, Erica, you got anything you want to add before we go?
I don't. I think this was a good topic. Hopefully, people were able to get a little bit out of it and get a little bit of insight as to what we're looking for.
Absolutely. And look, you guys, if you haven't signed up for our class, our home and credit master class, we are doing 6 weeks of home and credit. 6 weeks. We are on week 2. Week 2 starts next week, actually. So if you want to start, it's not too late. Everything's recorded. You can go to www.mycreditrecipe.com, www.mycreditrecipe.com. For those of you who don't know me, my name is Jessie Lynn. I'm a Triangle Realtor with A to Z Realty. You can reach me at 919-818-9854. Miss Erica Batts.
Hey, and I'm Erica Batts. I am your mortgage lender. You can reach me at 919-608-7916, or you can reach me at ericabatts.com.
You can reach all of us in the clubhouse at www.thehomebuyersclubhouse.com. You can find us on Facebook in our group and on our page at Homebuyers Clubhouse. You can find us on YouTube at The Homebuyers Clubhouse. We hope you guys have an awesome day. We'll talk to you guys later.
Bye.
We're going to get one of them to go.